what's going on in the U.S. Of course, the U.S. is the world's largest economy. The U.S. dollar is the world's largest reserve currency. So what happens here doesn't stay here. And we're heading for a very severe recession. I just want to kind of explain briefly the dynamics of that. So the Fed's raising interest rates. We know that. They started, it wasn't that long ago, but March 1st, 2022, the Fed policy rate was 0%. Today, it's 4.5%. So that's 4.5% in about 8 or 9 months. People remember Paul Volcker. Oh, Paul Volcker raised interest rates to 20%. Well, he did, but so far Powell hasn't raised them as high. Jay Powell, the chairman of the Fed, hasn't raised them as high, but he's raised them fast. I mean, even when Volcker was working his way to 20%, it took 3 years, from 1979 to 1982. And Jay Powell has done this in, like I say, eight or 9 months. So that's a very rapid, very steep path. They started with baby steps, 25 basis points last March, and then 50 basis points following that, but then 4 hikes in a row, 75 basis points each. And the most recent one just a few days ago was 50 basis points, but got us up to 4.5%. So what's going on? So I want to talk about 3 views of the world. I'll be brief. The first is Jay Powell's view. What is Powell's plan? What is Jay Powell doing? The second perspective is what does the market think is going to happen? The market doesn't necessarily have to agree with Powell. And then the third thing is what's really happening, because that's the most important, because the market has it wrong too. So we'll do the Powell plan, the market view, and what's really going on. So Powell's plan is clear because he's told us 5 times. He's starting to worry that no one's listening, but he gave speeches August 26th in Jackson Hole, September 21st in Washington, D.C., November 2nd, again at Washington, D.C. at an FOMC meeting, November 30th at the Brookings Institution, and again on December 14th at an FOMC meeting in Washington. So it's 5 speeches, and he said the same thing all 5 times. He said inflation is job one. It's not that we don't care, but unemployment is going to go up. We're going to have a recession. He doesn't use the R word, by the way, but it's implicit in everything he says. We are going to have a recession. Unemployment is going up. And too bad. It's kind of too bad, because we got to get inflation under control. And so the Fed is in search of something that they call the terminal rate. What's the terminal rate? The terminal rate is a rate that's high enough to bring inflation down on its own without further hikes. So it doesn't have to be higher than inflation. It has to be high enough to cause inflation to come down to the Fed's goal of 2% without hiking more. And when they get there to that terminal rate, they'll sit tight. They call it the pause. And the pause could be a year. And Powell said this, again, this is right out of his script, to mid-2024 perhaps, before they actually cut rates. So Powell's in search of the terminal rate. By the way, if you said to me, hey Jim, what's the terminal rate? I would answer truthfully. I would say, I don't know, but neither does Jay Powell. Affecting the markets, you're on the wrong side, you're going to get run over. So I look at the dots not because I put weight on them as predictive analytic tools, but because the market pays attention, so we have to pay attention. So the dots say that the terminal rate is going to be approximately 5.1%. They're not going to have a 0.1%. So 5.25 is a good estimate. That 5.25 is your best guess as to what the Fed thinks the terminal rate is, because that's what they said in the dots. So we're 4.5 now. So how do you get from 4.5 to 5.25? What's 25 basis point hikes. That would be February 1st. The one after that is March 22nd. And the one after that is early May. I'm not sure the exact, May 3rd or 4th. I think it's May 3rd. So you're going to see more rate hikes, 25 basis points each, February 1st, March 22nd, and May 3rd. That's going to get you 5.25. At that point, they should say, okay, we're at the terminal rate. We'll sit tight and let inflation come down. So that's what Powell's going to do. Here's what the market says. Okay, so that's the Powell plan. We already know it. The market says, hey, inflation's already coming down. Well, it is. That's actually actually true. Inflation peaked on a year-over-year basis. Monthly report calculated year-over-year was 9.1% in June, but it's come down to from high eights, mid eights, low eights, 7.7, 7.1. Now 7.1 is still high. Don't get me wrong. Inflation is still high, too high. I buy gas and shop for groceries just like everybody else, so it's still too high. But it has come down from 9.1% to 7.1% in the last 5 months. And so the market says, hey, you did it. You're already there. Inflation is coming down. Why don't you stop? And by the way, you're going to get the memo, maybe in February or sometime soon, you're going to get the message. The economy is going to be slowing down. Inflation is going to be coming down. You're going to hit the pause button early, maybe as early as February, and then you're going to cut rates. This is the famous pivot. Whenever you hear of the Fed pivot, that's when the Fed turns around and starts cutting rates instead of raising them. And that'll be just in time, and growth will slow, but it won't be too bad, and we'll come in for a soft landing. And this is the Goldilocks scenario. So again, typical Wall Street, get the pom-poms out. The Fed's going to cut rates by March, and so buy stocks. That's all Wall Street knows is buy stocks. So that's Wall Street's version. So there's the Powell plan and then Wall Street's version. Here's the reality. There is a chance that we are already at the terminal rate. But the conundrum is inflation coming down because the Fed is still hiking, or is the inflation coming down because they're at the terminal rate? Well, we don't know. It's kind of hard to sort those things out. Powell would say, yeah, it's coming down. I know that, of course, but it's because I'm hiking and I'm going to keep doing it. My view is, no, you actually did it. It's mission accomplished. You just don't know it. You're fighting. You're like the Japanese in the caves fighting 4 years after the end of World War II. I mean, you're still raising rates and you already got to where you want to go. That means, as usual, they're going to screw it up. They're going to blunder. They're going to go too far, and it's not going to be a mild recession. It's not going to be Goldilocks. In this version, Goldilocks gets eaten by the bears. In other words, you're going to throw this economy into a very deep recession because you're going to go too far, as usual, and you're not going to know it until too late. By the time you realize it's mission accomplished, you will have gone too far, too long, rates are going to be too high, and it's not going to be a soft landing. It's going to be hard.
I like to leave this with this thought right here. What Jim was saying is, I don't save cash. I save gold and silver. And I've been saying that for most of my life. I have tons. I literally do have tons of gold and silver. To me, that's cash because it's liquid. If I have a gold coin, I can spend it today. So I'd rather save gold coins and silver coins. And I do. I own gold mines and silver mines. So part of being an old guy and all this, and I've lost many opportunities because I just don't trust the stock market, because in my opinion, and I could be wrong, I think the stock market is rigged, just as gold and silver is rigged. It's called, I forget the name of all this stuff, but if you buy SLV, which is silver, it's an ETF, how do you know there's any silver there? You buy GLD, which is paper gold, how do you know there's any gold there? You really don't. So I'm kind of a skeptic and a cynic, much like or cautious. I'd rather have the physical gold and silver in my hands if you can get it. And the reason people are having a hard time getting it, because the premiums, let's say the spot of silver is $20. The premium may be an extra $5 on top. The premium is because it's hard to get. So when premiums are going up, it's actually a good sign for me, because I do own tons. Kim and I do own gold mines, silver. We don't keep it at the house, so don't come visit me. And safe vaults all over the world. I've been preparing for this crisis coming for years and years and years. So let me dumb it down, because one of the best things about Rich Dad is we'd do our best to keep it simple. My philosophy, and I don't expect you to agree with me, is I don't touch anything the government can print. So I don't trust cash. I don't trust stocks. I don't trust bonds. And I simply trust things they cannot print. So when I invest in oil, I don't invest in oil stocks. I invest with my friend Mike Maselli because we own oil wells. So what happened was, when Biden took the Keystone XL pipeline offline, this was one of the first acts he did. That's how I knew he was working for Klaus Schwab of the World Economic Forum. He took oil off the Keystone pipeline off. I was pumping oil at $30 a barrel. So I was happy. The moment he cut off the Keystone pipeline, at that time, I think it went over $100 a barrel. So I was watching Biden do this in 2020 when he came in, and I went, he's screwing us. Biden is intentionally screwing the poor middle class. So when the price of oil went up, unfortunately, I get richer. I have more cash. I buy more gold, silver, and real estate. The second thing, so I don't buy anything they can print. I invest in land and property, which is I control via the asset, we call interest rates. I also own cattle, and I own Wagyu breeding bulls. Why Wagyu? Because Wagyu is a brand. The rich will always have money. Do I kill the cattle? No, I buy the bull. And what I want from the bull is the semen, because they pay for the semen. It's called semen flow or cash flow. So just some of my ideas is that because I'm so cynical, since I was a kid, when I was 17 years old, I picked up a dime. This was 1964. I picked up a dime, and the dime had copper on it, and that was Gresham's law. Gresham's law says when fake money enters the system, real money goes into hiding. So because my rich dad had educated me, when I looked at that dime, I said, what does that mean? He says, you better start finding some real dimes. So now 17 years old, I would caddy and do anything to make a few bucks. I'd go down to the bank and I'd buy, rolls of silver coins like dimes and quarters, sometimes $50. I didn't have much money. And I'd look for that copper lining. And if it had copper in it, I just gave it back to the bank and got dimes and quarters without this copper line. It's fake money. Again, Gresham's law states, when fake money enters the system or bad money enters the system, good money goes into hiding. So as far as I'm concerned, and you talk to your financial planner, I have no stocks, bonds, mutual funds, ETF. I only invest in things they cannot print. So that's been my rule of thumb. If you can get gold and silver, I hold that instead of cash, because if I need cash, I just take my gold down to my gold and silver guy and I get cash. So those are my philosophies. I make no money from this. I'm not trying to tell you what to do. I simply tell you what I do. And what I do is I just don't trust my government. I don't trust the government. I don't trust Biden. The Biden crime family. You notice Jim talked about the Ukraine and China. Mm-hmm. Where was Biden getting his money? Ukraine, Russia, China. I just don't trust him. You have the Federal Reserve Bank, which is really a cartel. It's really fascism. A definition of fascism is when a private enterprise owns a public service. So the Fed is run by a bunch of very powerful bankers, but it puts out the Fed as into the government service. That's fascist. So I don't trust them, and I definitely don't trust Wall Street. In Wall Street, only people that make money are insiders. So if you read Rich Dad Poor Dad, especially my book, Cash Flow Quadrant, there's ES, stands for self-employed small business, who pay the highest taxes.